Good afternoon, Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. If you'd like to know more about the services and free products, just visit CFDs.com or CFDS.com. This is the website, CFDS.com, and certainly take advantage of the products and services. Okay, folks. Right, interesting. How can I explain the price action in the last 24 hours? A frustrating day for me today. Stopped out a lot of trades, negative for the week thus far. Even though I actually witnessed a setup, I was actually put off by the actual yield rising and hitting 1%, the German Bund, and obviously the euro spiking higher as well, which obviously triggered off the risk-off scenario. And unable to adjust quick enough really from that perspective. But having said that, not many individuals knew that this deal was going to come out late in the day, unless those that had inside information that were buying in advance. Okay, so hence the reason why it's a very confusing day, looking at it from a rational, logical and usual price action perspective. Okay, let's start the day. So Asian markets overnight negative. Nikkei obviously down, given the fact that we had some comments with anti-QE comments overnight from the BOJ, one of the BOJ members. Okay, so that obviously created a risk-off type environment. You had the Shanghai and the Hang Seng negative overnight as well. So taking all that into consideration, it should technically have been a risk-off type scenario, and that obviously wasn't the case. Because the market's quickly reversed. Okay, so we come into the session, okay, from that perspective. Now in terms of economic data itself, the US data, it was mixed overall. Okay, so if I just take you through to the economic data section. Okay, so given the fact that we had the comments out of the BOJ, and that caused the dollar to collapse, or the USD JPY to collapse, which caused the Euro USD to spike to a large extent. The Kiwi and obviously the Aussie spiked as well. Then we had industrial output out of Italy, very weak. We had economic data out of France, weak. Okay, so I think I've actually got this summed up here. Okay, so we had French industrial production negative, minus 0.9%. Manufacturing production minus 1%. So both the economic data was weak. We had the German 10-year yield climb to 1%. So obviously the bonds were making new lows, and the euro is obviously spiking with the anti-QE trade obviously in full motion. Also, given the fact that we had comments from German Parliament, opposition against Greek aid grows. So this afternoon, comments from Germany, drip feeding and giving them some type of assistance again is contrary to what we originally told. Okay, so it certainly is strange with regards to this news flow, and again it has yet to be confirmed. So again, certainly suspicious of the news itself, and as we all know, with regards to Europe, you get claims and counterclaims, so it's all about waiting for that counterclaim, I think, from my perspective. But again, we give the market the benefit of the doubt for now, and we have to respect price action. Okay, so we had economic data out of the UK also. The industrial production actually came out better than expected, but the manufacturing production came out negative. Okay, so actually came out worse than expected. Then we did have GDP estimate coming at 0.6%, so slightly better. And mortgage applications, nothing of any real importance there. Okay, so the situation has always been focused on Greece, and that certainly seems to be the scenario at present too. Okay, let's look at European markets now that I've covered the actual fundamentals. So let's try and cover the technical side of the equation. Okay, so go to the FTSE 100 chart. Okay, so FTSE 100 chart itself bounced off to 200 MA. Okay, so again, bear in mind you need to look at the weekly chart too, and technically it seems to be it's held at a key support level at 7.6, etc. So again, certainly needs to be respected for now. Okay, so and the markets obviously bounced quite considerably. Daily chart again bounced off to 200 MA. How long this bounce lasts, again, certainly needs to be taken into account as well. Okay, so whether or not this is a sustained rally or a move higher, or whether or not this will lose legs, is yet to be seen. Okay, with regards to the FTSE 100. Now, if I go to a let's bring up the actual intermarket analysis. Bear with me. Let's bring up my multiple charts. Okay, so here we go. So I need a chart of the FTSE 100 again. I'll just go back to the FTSE 100. Okay, so a 10-minute chart itself, obviously we've seen this thrust higher now. I did have a short at this level here from 6780 region. I was stopped out at 6810, and obviously given the fact that we had this spike post the actual news regarding a potential deal from Germany, some sort of staggered deal, which obviously caused the markets to spike higher. Okay. So for now, obviously I was expecting this resistance level to hold. Obviously that hasn't been the case. We also had previous support equals resistance in this region also, hence the reason why 6785 was a solid resistance level. We had resistance, or we do have resistance here at 6 and 830. Obviously the pivot high there at 6840. So those two levels will be levels of resistance. Obviously if that fails to hold, then your next level of resistance is going to be the level here at 6870, then obviously 6890, 6900, and ultimately 6911. Okay, going to the 60-minute chart of the FTSE 100 now. Okay, so 60-minute chart of the FTSE 100 certainly puts us back into resistance. So this level here is resistance, given the fact that we failed to obviously make a new lower low, lower high. So again, using your Fibonacci, previous support equals resistance, as you can see here and here, which is 6840, and again 6870 if we obviously continue to march higher, and then obviously you've got 6910. Now using your pivot high to pivot low, so if I take this pivot house, excuse me, so if I just take this pivot high here, take it to the pivot low, we're into that 50 to 61% resistance. So therefore one would presume, or one would conclude, that the FTSE 100 certainly is into resistance at this current juncture. Okay, now given the fact also the FTSE 100, given the FTSE 250, again it's an inside bar on the weekly chart. If we just pivot over to the daily chart, yes, we have bounced. How strong or how the strength of this bounce again needs to be seen, okay, to a large extent. The FTSE 350, or should we say FTSE All Share, will give us a better view. So again, you have had a potential bounce, but given the fact that we make it a triple top or a quadruple top, the market certainly seems to have broken out of the key support zone, which is this one here. Okay, so obviously once we broke out there, you're looking for a potential lower high, and then obviously potential test of this 3650 and 200 MA below. So certainly remain circumspect. That's all I can say at this current juncture with regards to the FTSE 100. Okay, so the actual market itself, or especially the FTSE, given the fact that we have the actual volatility or measure of volatility for the FTSE, so I'll just bring that up for you, and you can see that we certainly ticked down today, and we certainly seem to have held that potential support zone. So again, if you look at a 10-minute chart, you are into a support zone, and also given the fact that we had an impressive thrust higher into the close as well, certainly needs to be respected in terms of the FTSE itself. Okay, again that's indicating or denoting potential risk-off scenario from my perspective. Okay, so going to the actual DAX now, okay, so which is a king of Europe, chief of Europe. Obviously we had quite a substantial sell-off towards the close, which again is a warning sign for the longs. Okay, the daily chart, obviously we held that pivot low, which I indicated yesterday in yesterday's video, and we've obviously bounced with a bullish engulfing candle. The 60-minute chart again has broken out this bearish channel, so again has to be price action certainly needs to be respected there, so I can get rid of that. Previous support equals resistance failed to hold on this occasion. The only resistance zone that we currently have now is this one here at 11287, and as we all know, gap fill is at 11340. So the German DAX certainly seems to be targeting that at this current juncture. Okay, so you can see it certainly broke out of all the diagonal trend line resistance zones that we potentially had. It was all about these two. Okay, so again the market certainly had this falling contracting wedge pattern, and with good volume too, and is into pivot R3 resistance. So watch out for the 11340. That will certainly hold resistance in the interim with regards to the German DAX, given the fact that it's actually classed as gap fill resistance. Going to your 10-minute chart, see if we can see any early indications. Again, pivot R3 held perfectly well. That resistance zone certainly needs to be respected for now. Obviously, you've got the unfilled gap above, which I've already highlighted. So again, the inverted head and shoulders formation, the pivot was 11.030 to 10.860 or 66, should I say? 10.860. So if I just calculate this for you, so you're looking at 11.030 minus 10.860. You're looking at 170. So 170 plus the 11.030 equals 11.200. Okay, so given the fact that your 11.200 target has been exceeded, then that would indicate or refer to a short squeeze over. Okay, given the fact that the market has pushed higher quite considerably, and therefore once a short squeeze is generally over, the market tends to reverse. Okay. Focusing on a your pivots, so you just extend that across with regards to the German DAX. You can see that certainly has held resistance. So the upper channel, as you can see here, has certainly held, and the inverted head and shoulders pattern is obviously over as well. With regards to the German DAX, just taking the pivot lows here. Okay, and obviously you're in a bullish channel, but we are in the upper part of the channel and with the increased volume towards a close. So again, that's a potential indicative sign of a potential top, and given the fact that the inverted head and shoulders formation has a short squeeze and is actually completed now. Okay, so that certainly needs to be respected in the interim. Okay, so German DAX certainly into resistance from my perspective at this current juncture. Now look at the French CAC. This I was stopped out on this trade here towards the close, caught out on this short squeeze, quite a prolific short squeeze at that as well. Okay, now let's see if we can identify as to which way the market is attempting to go here. Okay, so daily chart first of all. Let's just focus on the daily chart, so you give you an insight here. Okay, so yep, the diagonal trend line obviously held. We're putting a pivot low. The market certainly bounced. We have this unfilled gap here on the daily chart that certainly needs to be observed. 4975. Watch out for that level. I think we did hit as high as 4950 odd. So again, that certainly needs to be observed and watched very carefully. With regards to the downtrend, yes, we do have one. So if I take the pivot high here and just connect it across, obviously you are into that resistance zone now, potentially. Okay, so that certainly needs to be respected. So the 60-minute chart of the French CAC, let's bring that up for you. Okie dokie, so you are into this resistance zone. These support levels obviously have not been respected, so therefore one would get rid. Okay, so you have this resistance zone here. So you have diagonal trendline resistance and you have horizontal trendline resistance at this 4955, 4950 region. So again, that will certainly hold as support. You do have 4990 as potential gap fill. That needs to be observed as well. A 10-minute chart. Obviously, we've negated this trend line, so we can eradicate that now. Okay, and what we're focusing on at present, we're just taking the pivot lows here now. So if I just take the pivot low from here, connect it across, and obviously it gives you that potential resistance zone there. And we are in this bullish channel, so upper channel resistance into that channel resistance. Okay, so again, in terms of horizontal resistance, just draw that in for you. So that would be one level of resistance, and that's another level of resistance as well. And obviously you've got the gap fill level at 4990, so that certainly needs to be observed. But we are into resistance at this current juncture, the way in which the market stands as it is. Okay, the actual Euro stocks now. So bring up the Euro stocks, go to your daily chart of the Euro stocks, and you certainly seem to have held that previous support equals resistance, held that diagonal trend line. We've got a bullish engulfing candle now, although one must certainly be aware that this is a falling expanding wedge pattern. Okay, so again, this certainly needs to be observed. Okay, so this certainly needs to be observed. Okay, so it's a bullish engulfing candle. Okay, so that's what we're focusing on at present. So it's a bullish engulfing candle. So 60 minutes chart. Okay, again, the markets obviously failed to put in that bearish or bear flag pattern, given the fact that even though the Euro USD was certainly moving higher, even though the bonds, obviously the yield on the bonds hit 1%, etc., the markets obviously had other ideas. Call it insider information on the potential Greek deal. I mean, that's probably the only explanation I can give, observing price action and the rise, even though the markets ignored the rise in the euro and the rise or fall in the bonds. They obviously were buying with conviction, so they must have had some inside information. Otherwise, why would you buy? So it's a bit fishy today, very fishy, the price action. Okay, so again, certainly some insider trading there. Okay, so Mr. Sarao is obviously he's not alone. Okay, so here we go. So with regards to the markets, I mean, there's no need to spoof a market when you already have inside information. I mean, why would you need to put them off when you can front run them? Okay, so again, horizontal resistance here at 3540. Again, that will be respected. If the market does push higher, 3555 is certainly solid resistance on the euro stocks here. Okay, so a move higher certainly has been quite impressive, but the markets, given the fact that we've rallied from almost 230 points now off the lows on the euro stocks, so again, that certainly needs to be taken into consideration on the euro stocks. Okay, folks, so a resistance zone at 3540 and 355. There will be two areas of resistance or solid resistance. I will certainly look to be potentially entering a short scenario or short position, given the fact that geopolitics and socioeconomics realign or align with that. Okay, so that certainly will be important going forward. Okay, that's the situation that we find ourselves in at this current juncture. Okay, so this is the summation of the actual European indices. Again, certainly visit cfds.com and obviously take advantage of the services that are offered. Hopefully going forward we will be organising a daily reports for the markets, such as the European indices and the major forex pairs, and potentially even covering the bond markets as well. Okay, folks, so and obviously including commodities. So that's risk on, risk off, wax on, wax off, and over and out from me. Goodbye now.